Is the Australian economy heading for a recession? Let's have a look. Good evening, everyone, and welcome to this episode of Heiser Says. I've got my stein of coffee and a cup of water because I'm going to be talking about our economy. There's an article that appeared from Jason Murphy on news.com today about huge warning signs, or a huge warning sign for the Australian economy. I know I'm adding to the title there, but it's for effect. So let's have a read through this and discuss a few definitions and terms just to get an understanding of what's going on there. For some people who may not be familiar with a bit of the economic mumbo jumbo, I know that if you've watched South Park, as all well-respected, well-rounded people I'm sure have, there's a scene where they are trying to determine the value of a Margaritaville mill mixer, a fruit drink mixer. And they do that, the economists do that using voodoo magic by chopping the head off a chicken and having it run around to determine the value of this mixer so the boys can get a refund. So, economics, it's an odd science, social science, really. They try to straddle the realm between social, hard sciences and the softer psychological sciences there. They try and play in both worlds. And it's interesting, it really is, because some of the presumptions that economists make that people are rational actors, I don't really think, I think that's starting to be questioned nowadays, that some people don't always act rationally. That's really, if anyone has had any experience having any Facebook discussions about politics or just had a discussion with any people, a lot of people will not act rationally, and we'll all do it. We will all act emotionally sometimes, and that's just how we are. So there's some fundamental questions just in different economic modeling, and that's why sometimes it doesn't work out. But let's have a read through this article. So it might sound like a good thing, but this plunging number means something has gone horribly wrong with Australia's economy. So, Australian inflation is at zero, and a huge sign something has gone horribly wrong in the economy. The Australian Bureau of Statistics reported the change in consumer prices between the start of January and the end of March was 0.0%. Wow. The failure to record any inflation is a sign of an economy operating well below its potential. So let's have a look. Let's just put a pin there, and we'll have a look at some definitions. And we'll go down here. This is just from Wiki, just to explain what inflation is, because we hear it all the time. So in economics, inflation is a sustained increase in the general price level of goods and services in an economy over a period of time. And how the ABS measures this is they've got a basket of goods that I assume they send out a junior to go and buy, or they probably just price check every quarter, and they track that. And then they index it so they can, see that price over time. When the general price level rises, each unit of currency buys fewer goods and services. Consequently, inflation reflects a reduction in the purchasing power per unit of money, a loss of real value in the medium of exchange and unit of account within the economy. So what that means is, if inflation is going up, your money is essentially worth less. Now, in lots of wonderful socialist utopia, like Venezuela, the money is worth so little, it's just left in the streets. In Zimbabwe as well, I think they were printing $1 million banknotes or $1 billion banknotes, and in Germany after the war, just inflation skyrocketed, so the value of money was so low. And people, one thing that happened in Zimbabwe recently was a lot of them were transitioning to Bitcoin and cryptocurrencies. And as a side note, when I was just getting into crypto, I transferred some crypto there, some Bitcoin, about $100 to sell at their market, for triple the value. And I thought, oh yeah. But then I couldn't get it out of the country. I had to flip it over to another crypto and ship it right back, and I lost all my profit. So lesson learned there. But nevertheless, it just shows you that your purchasing power is steadily decreasing. So an inflation rate of 3%, every year your prices are going up, but the money that you have is decreasing. So the measure of inflation is the inflation rate, the annualized percentage change in a general price index, usually the consumer price index over time. The opposite of inflation is deflation. So, why is this important? Inflation affects economies in various positive and negative ways. The negative effects of inflation include an increase in the opportunity cost of holding money. Now, that's very important. Uncertainty over future inflation, which may discourage investment and savings. And if inflation were rapid enough, shortages of goods as consumers begin hoarding out of concern that prices will increase in the future. So, there's a few things. The opportunity cost. Now, this is a term in economics. Say, I've got an opportunity cost. Now, I could, spend an hour and make a YouTube video, and I'll put that up on YouTube, and I might make, $10 in advertising over a year on the video, we'll say. And I could do that and get my $10 over a year, or I could play the new game I bought yesterday that I've been wanting to play on my computer and go get a run. Now, the playing of game may be enjoyable, and it actually won't. That's a terrible example because that's entertainment. Let me change that. I can make the YouTube video and just say make $10, or I could go work on an architectural project and make $300. Okay, so even if I'm making the YouTube video, I'm making $10. The opportunity cost to me personally of doing that is the $290 that I additional I could have made going and working on some architectural work. So that shows you the difference in opportunity costs there. It comes down to the person. In this example, with inflation and interest rate changes, the opportunity costs of not investing the money in something else is the difference, the loss. So positive effects include reducing unemployment due to nominal wage rigidity, allowing the central bank more leeway in carrying out monetary policy, encouraging loans and investments instead of money hoarding, and avoiding the inefficiencies associated with deflation. So there are a few things here to consider because our inflation is zero. Okay, the last quarter it was zero, so we could be heading towards a deflationary period. Look, see here on this little graph here, that says 1920. Look what that is. That's a deflationary period. Another 1930 deflationary period. Okay, there was another deflationary period just around 2010. I wonder what happened there. So these are just things to be aware of if you're not familiar with the terms. So let's jump back to this article. So the result of zero is not only shocking on its own, it exacerbates weak inflation outcomes reported over the last few years. The Australian dollar plunged after the news, and pressure is mounting on the Reserve Bank of Australia to act. Okay. Now we have to also be aware it's limited as to what the Reserve Bank can actually do. What can they do to affect it? The problem is interest rates, which is the main lever they pull to influence the economy at the moment, are so low. Is any drop in interest rates actually going to make any difference to your day-to-day spending? So just think about this. As a normal person, if we start getting deflation, if your money starts getting more value, you will be reluctant to spend it. And the more people that are reluctant to spend it, the less money that is flowing in the economy. So that means unemployment will start increasing, and you'll start getting more and more issues. And, I've been talking about housing crashes again and again with these scaremongering videos. So now I thought some scaremongering videos as well about this. So I'll have a shot of coffee on that. Steins of coffee. But see, even I've changed my spending habits. Let's see, a decade ago, I would have been drinking hoity-toity Merlot coffee that I would ground the beans myself, and I had my own espresso machine. Now I've trained myself to drink the Aldi instant coffee because, frankly, it's not too bad. I quite like it. I just drink it straight black without any milk, and I like it. But you gotta get some of the luxuries. Luxuries have to disappear. Anyway, back to less of my stories and more of the article. But why would we want inflation? Too much inflation is bad. If prices rise too fast, our money's worth less and less. But deflation is even worse. Yes, it is. When prices are falling, it makes sense to stop spending now and wait for prices to fall. In this way, deflation strangles the consumer economy and can cause recessions that put many people out of work. Exactly. To try to avoid deflation, the Reserve Bank of Australia does inflation targeting. It aims to keep inflation at a low, predictable level of between 2 and 3% a year, on average, which it's generally been doing. Inflation targeting is popular around the world as the best way to promote steady economic growth and prevent mega inflation like in the 1970s. Thumbs up to people from the 70s that can remember that, because I wasn't born. But for now, the RBA's inflation target is not working, as the next chart shows. You'd want average results of 0.6 and 0.7% per quarter to get in the middle of the 2 to 3% annual inflation rate. Inflation has mostly been falling, and then it hit zero. Well, yes, let's have a look at, oh no, that's not inflation. I'm going to show you something else. So yes, so inflation has been trending down then. Well, look at that, 0.6, 0.6, 0.4, 0.44, 0.5, boom. That's relative, that's a big jump, but still inflation's pretty, oh no, if they wanted a 0.6 or 7, that's okay, that's good, that's low, that's low, that's a big delta shift, isn't it? So weaknesses are everywhere. The Australian economy is showing plenty of signs of weakness other than the very low inflation. House prices are falling, yes. Wage growth is pitiful. I don't know. Does wage growth even exist when our dollar on a global scale is following? Just think about that. If the dollar is crashing down, we're paid in Australian dollars. A lot of our products are imported. And every parliament, both Labor and Liberal are pushing a green agenda, a sustainable energy agenda, which is going to up our power costs. And it was interesting. Someone left a comment saying that they're not talking about reducing your quality of life. They're just going to talk about, encouraging you to be more efficient, turning off a few lights here and there. And I thought about that. I'm going, well, no. If your power price goes up, if your power bill's here, and okay, well, power bill's gone up here now. Oh, I need to find this much saving. Oh, dance lessons have to get cut from 3 to 2. Oh, dance lessons have to disappear. Oh, we have to start buying the Aldi instant brand coffee. Oh, God forbid, the Black and Gold instant brand coffee. So, that's what quality of life reductions are. All these sustainable things sound nice and good, but they're involving increase in costs. Your quality of life is going to suffer. And maybe a generation needs to experience that. Maybe there are too many people that are too young to remember what hard times are. We need to really see that. And here we go. I'm just going to copy this. I'll bring up this image here. This is showing GDP growth, 20 years in Australia. I mean, look at this. This is the last time we had a recession. Last time we had a recession in 1980s, the 88. I remember that. And then 1990, I remember that one too. I remember those two as a kid because my father had a business. And I just remember all of a sudden, because he was in construction, work was drying up. It was this 1990 recession. This is when we moved from Victoria to Queensland. I remember that there. So, no, that wasn't 88. That was 84, wasn't it? So 88 would have been, here. So how long has it been? 1990, there you go. Nearly 20, over 20 years, nearly 30 years. So you have a generation of people in the workforce. You've got 2 generations of people voting that don't know what a recession is. That don't know what it is. So we're going to get, everything is pointing towards that we're going to get the recession, the green recession Australia had to have. And let's just jump, because we'll look here at the definition of a recession. And this is again from Wikipedia, and this is for the benefit of people who may not know the actual definition. In economics, a recession is a business cycle contraction when there is a general decline in economic activity. And this is a general decline in the entire economy, not just certain sectors. Because I would argue if you remove them, mining from certain sectors or apartments from certain sectors, some have been in decline, in recession. In macroeconomic indicators such as the GDP, which is gross domestic product, investment spending, capacity utilization, household income, business profits, and inflation fall, while bankruptcies and the unemployment rate rise. In the United Kingdom, it is defined as negative economic growth for 2 consecutive quarters. Okay, so you need to have 2 quarters. That's what I was taught when I did some economics at university, that it was 2 quarters. I put money that it's the same here in Australia. So that's why we're talking. That's not necessarily inflation being at 0%, but inflation at 0% is a sign that the economy is starting to slow. That it's starting to slow. So unemployment is 5%, which is an impressively low number a decade ago. Which was an impressively low number a decade ago. But these days, people can get a few hours employment a week driving an Uber and be counted as employed. That is a fantastic term. Oh, clarification there. Good on you. What's your name? Jason, Mr. Murphy. Tick there, mate. That is a really good clarification there, because a lot of people don't realize that when they're measuring employment, if you do 1 hour of work a week, you're considered employed. Or if you're not even looking for work, if you've stopped looking for work, you're not counted as participating in the economy. So they take you out of those unemployed figures as well. So if you're heartbroken and over it, given up, you stepped away, you're not counted in it. If you're doing Uber for 1 hour a week, you're not counted in that as well. So that's quite interesting. So the underemployment rate, yeah, he's talking about that here. That's what's important. A 5% unemployment rate is not full employment anymore. It is probably equivalent to the old 6 or 7% unemployment, which is to say it represents a slack labor market where wage growth is not happening. Well, yes, you wouldn't have the complete lack of wage growth that we have now in general in our economy if we had full employment. It's that simple. In the US and UK, oh, by the way, unemployment in Queensland is 6.1%. I just read an article a few days ago about the manufacturing sector here in Queensland, which has lost 18,000 jobs. Anyway, back to this. In the US and UK, unemployment is at or below 4%, and with inflation so low, Australia has no reason not to aim for something similar. Our unemployment rate could probably fall to 3 point something without risking high inflation. Putting all those extra people into jobs would be terrific for them, great for our economy, good for tax returns, good for company profits, and would help avoid deflation. It's a shame nobody is talking about it. That's the thing. One of the issues with employing people here in Australia is it is quite onerous. As a small business owner, the red tape is a pain in the ass. You've got unions that organize enterprise bargaining agreements with the big businesses that are anti-competitive for small business. So you'll have, Macca's workers earning less on a Sunday than a mum and dad award, someone who's on an award for a mum and dad business, because the union's, giving them a special deal. So it's not a fair market in some regards. It really isn't. So how do we fix this? There are 2 main roads out of our low inflation quagmire. The one everyone expects us to take is cutting official interest rates. It is the RBA, after all, who are supposed to control inflation. Well, yeah, can you cut them? I doubt it. I doubt we'd even see the difference. If they cut interest rates, that should inspire companies and consumers to save less, borrow more, and spend more. It should, in theory, give the economy an immediate boost. But what if it doesn't? Do more for the real economy and just props up the housing market? Well, the problem is to do all of these things. Remember, the housing market sector of the economy is decreasing because the banking sector is also restricting access to financing. It's being tougher. You've got the Royal Commission as well that's come in. You've got the banks that are avoiding risk. That's all their business is. They're averse to risk. They want to manage their risk. They want to get out of their risk. That's it. Banks aren't your friends. Don't listen to anyone who tells you they're your friends. They're just risk managers. That's it. And you've got people that haven't had wage growth in a significant period. You've got energy costs increasing. You've got other living costs increasing. And you've got the big unknown of a election coming up with Labor wanting to, gut negative gearing change, all these things. And that's not going to give anyone confidence to invest in properties with the unknown of what's going to happen. Not at all. Every time there's an election, people always back off and wait. They always back off and wait. That's one major reason the RBA hasn't already cut interest rates. Despite low inflation, rates are already at a record level of just 1.5%. They worry further cuts will not do much to boost consumer spending. Yeah, exactly. While just making household investment more attractive. A second major option for boosting inflation, growth, and employment is for the government to stimulate the economy with a bit of spending. They call this fiscal policy. It can also boost the economy in three ways. So, higher spending on things like infrastructure and health, more cash transfers. So essentially printing money and giving it to people, or, giving taxes to consumers, like higher pensions, higher welfare payments, or checks in the mail, as Kevin Rudd did. Did everyone remember that? When Ruddy sent out those checks, I think everyone got $500. Everyone got $500. What did you spend your $500 on? I think I gave mine to Rachel. I think she bought a sewing machine under the promise that she'd repair clothing. And to be quite honest, she bought a really good one, and she made her own wedding dress. I mean, that saved us thousands of dollars. So I really should not be complaining about that anymore, but don't tell her. Or deliver tax cuts. Well, yes, we've got Liberal, the LNP are pushing for tax cuts, but the tax cuts are 4 years away. They're not going to have any effect on the economy now, are they? I need to delve into their policies to a bit of a greater extent, but is it going to make any difference? The government has not done much stimulatory fiscal policy, partly because with the unemployment rate at 5%, they didn't perceive a need to. They need to look at the underemployment rate. But also because Australian governments are obsessed by getting to a surplus. A surplus is not particularly important for the economy, but the rhetoric of debt and deficit disaster has locked both sides of politics into pretending the budget balance is vital. Now, there is some debate over whether fiscal policy can really stimulate an economy. Some people say that if the government spends more, businesses and individuals spend less. But in my view, that's unlikely, and running a balanced budget while the economy is stumbling is evidence of poor priorities. The best fit for Australia is probably a mix of interest rate cuts and government spending stimulus. If we boost the economy, we should be able to get wage growth growing again, get more people into jobs, and get inflation back up to the target range of 2 to 3%. That's an interesting perspective. I would argue more for tax rates earlier. I would argue for more incentives for small business to innovate and to create jobs. I wouldn't argue for government spending. Now, as an architect, I'm familiar with the building education revolution that Rudd put out. And there was a whole series of projects, construction projects, because, the government gets good money for spending in construction with regards to economic stimulus, because it goes to all the trades and they spend it locally. But you had two groups that were procuring the work. You had the state schools, and then you had the Catholic education sector. And if you look at the differences in quality of outcomes between those two sectors, because the state sector that was spending the money had just copy, paste, garbage. Boom, you're getting a assembly hall. But we don't need an assembly hall. We need a library. Sorry, nope, you're getting assembly hall. Boom, stamp. Whereas the private sector, the Catholic sector, had more flexibility, more control over how to spend their money, and got better efficiencies out of it. That's why, this stimulus spending by the government, I'm more on the page that, people will overcharge the government. They'll add another 20% for the pain in the ass factor of it. And if you were to go the other way around and to allow people to have more money in their pockets, maybe more direct incentives to smaller businesses to spread it out further, that's what I'd be encouraged by. Guys, let me know what you think. How would you, what political parties, what should they be doing to try and avert this economic recession that Australia is having? Let's look at one more thing. We'll just I've got here the GDP figures here for Australia. So remember, we need 2 quarters of negative growth for GDP. Now, this is seasonally adjusted for the quarter of September to December was 0.2%, the change. Okay, the final consumption, it goes here, price change, so 1.4. And we'll look down here, it's trending down. You can see here, we're trending down. So we're heading towards a recession. The Australian economy grew by 0.2% in seasonally adjusted chain volume terms in the December quarter. Government final consumption expenditure increased by 1.8% during the quarter, contributing 0.3% growth points to the GDP. Okay, so we're not in a recession already because of government spending. Am I reading that right? Compensation of employees increased by 0.9%. Net exports detracted by 0.2 percentage point from GDP growth, driven by a decline in exports. Terms of trade rose by 3.1%. So why are Labor talking about implementing environmental policies, green policy, their bloody electric vehicle policy that will just add costs to everyone in our country when we're heading towards a recession? Why? Didn't they used to care about the working class? Workers, employees? What happened? What is going on? I don't understand. Has just political correctness gone too far? It's the identity politics has invaded them. What's wrong with Billy? What's wrong with Shorty? Why isn't he going, Australia's heading towards a recession. We'll solve it by doing this, this, and this. I don't know. I don't know anymore, guys. So, looks like we're heading towards a recession. Maybe this is what a generation needs. Maybe it's what a generation wants. Nothing's better for improving or reducing our carbon footprint than a few quarters of negative growth. Guys, please like, share, and subscribe. Ding the bell to see my daily content. And I'll see you all again tomorrow. Bye for now.